Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I want to talk about one single company that have been, a lot of community members have asked me over the last couple of months, weeks. So, and I've just got an email from one of the brothers that he wanted to look at this company. So that's exactly what we're going to do inshallah today. But before we do that, I just sent another video today, and basically at the beginning of that video I basically said I will be doing some buying today, and I didn't do it at the end because I was running out of time and I didn't want to make the video any longer than it needed to be. So since I'm actually basically posting both videos together today, I will be doing the buying right now. So in this video you will see, you didn't see in the last video, but you're going to see it in this video. And the company that I'm actually adding to is Mastercard. Mastercard is, I've said recently, is still, I feel like it's still undervalued company. I really like the business. You know how much I actually love the company. So I will be buying, I think I've got basically added the £250. Remember, what I normally tend to do is, and I haven't done it consistently in the last few weeks because the market has been a bit funny, basically is add £250 each week. But of course today, this week, this is the money that I wanted to spend this week. So £250 is going to Mastercard. Right now, as you can see here, I own 10 shares of this company. That's £3,566, and I'm down £141. So I'm going to send this to the market, and of course we're going to get on with the video. So let me send that and send it to the market and see what happens. So this hopefully will bring down my average, inshallah. So $466 or £369 basically, okay, overall. So hopefully that will bring down 465, okay, slightly lower than what we had initially. There you go. So that's the company that I wanted to. So apologies for not doing that at the end of last video because of course I was running out of time and I didn't want to continue the video any longer than it needed to be. And of course, as always, I've been saying this, it will literally cost you £15 a day and you get a lot out of it. You get all the buys and sales that are like right now. You've seen me buying whatever. I share that with the community first sometimes, but right now that was a live buy. So everyone is of course have access to that, of course. But you've got the access to the family portfolio. You got the dividend trackers. You've got the Discord where a lot of brothers and sisters are sharing very good practices, and I'm getting now a lot more questions through here where people are asking questions, and I'm kind of giving some ideas and things that I'm currently doing. And some people will ask hypothetical questions like, if you had £10,000 right now, what would you invest in, what would you do? And of course I'm giving my personal opinion. I'm not giving any financial advice because I'm not allowed to. So I'm actually sharing my advice, like my, of course, opinion on the platform as well. So if you have any questions, you can always ask me, because YouTube, I'm not sure, I don't go through the majority of the basically comments as much these days because I have a very limited time. Because remember, I've got a family and I've got a full-time job and I'm trying to do this as well. So it's a lot of time, basically it takes a lot of time. Now anyway, let's go on with the company that we want to talk about today. That's Align Technology, and this is one of the companies that basically have what is called Invisalign, aligners and so on. And of course they've been around for quite some time, and since 1997, I think 1997 exactly. 1997 is where they found the company. There's a lot more information if you're interested to find out a bit more information about the company. But one of the reasons I was quite shocked, actually, one of the things that shocked me when I was doing the research is the fact that year to date is actually down almost 39%. Sorry, for the 1 year, and then year to date is down about 20%. Last 6 months is at 26%. So it's not doing well at all. And Karen, the forward PE, we're looking about 22. So it's not really cheap. So it'll be interesting to see. So I'm going to go over the financials first, and then I'm going to compare this company with the S&P 500 and see how it actually performed over the last few years. Right. Now, as you can see, it's the healthcare company, so it's basically in the healthcare side of things. And Invisalign is basically one of the products that they have, and a lot more people are nowadays you've seen the clear like aligners people are using these days. No one actually uses those braces, you know, that they used to have before. So nowadays is more about the almost the invisible ones. Okay, and $220 per share is where the prices are right now. EPS up just about below $6 per share. $16.5 billion of free of market cap right now. It has a narrow economic mode and beta is quite high, so which means it's a little bit of volatile stock. Now current PE is about 37, sorry, and forward PE is about 23. So we've just, in fact, forward PE should be about 23. So since I've done the research, slightly gone down a little bit. The last 5 years though, it's been 40, so that tells us it's slightly cheaper than where it has been for the last 5 years, and in comparison to the sector, which is about 17 right now. Price to free cash flow right now about 33, and free cash flow right now, the company does not have any dividends, of course. Free cash flow right now is we're looking at about less than about 500 million, and free cash flow on compound annual growth rate for the last 5 years, we're looking at about 2%. Now free cash flow yield of 2% and free cash flow margin of 9%. So normally we're looking for 3%, greater than 3% or greater than 5. So this one we meet, this one slightly falls, okay, below what we normally looking for. Profit margin 11%, operating margin 17%, return on equity we're looking at about 12%, return on invested capital 19%, and total return in the last 10 years about 14%. Now one of the reasons probably the stock is down quite a bit is that for the last 5 years they're not actually growing the revenue. The revenue is not growing and the EPS is not growing. Now let's go on here and see for the financials, the income statement for this company, because that will tell us a little bit about the story. So this is the line that we're normally looking for. That is the total revenue the company is generating. So as you can see here, from 2.4 to 2.4, again that's slightly higher, then 3.9, 3.7, so it has a decline, and then it's gone up again, and it's gone up again. So yeah, it's up and down, it's not consistent, obviously you can see here, and the cost of that kind of stayed almost the same, and the gross profit is about 2.7 here, 2.6, 2.9. So again there's a bit of a decline there. Again, you basically 1.7 here. But yeah, so it looks like the gross profit has slightly declined as well. Sorry, increased, because 1.7 to 2.9, 2.6 slightly declined there, 2.6 is bounced back again, and that's exactly where it is at now. Let's have a look at very quickly the net income. So they've paid for all of these things, and the net income, okay, so it's not consistent. Again, we have a years where it's up, the years where it's over, almost closer to $2 billion, and it's slightly declined there as well. So it's interesting. It's gone up and down. The revenue is not great. And in fact, let me just have a quick look at the EPS side of things. Earnings per share basic. If we look at this line here, the basics, okay, as you can see, it's so wow. So 1 year, there must have been they must have acquired another business, but whatever has happened that year, so from $5.57 to $20, $22, over $22, and then back to $9 and then $4 and the $5, is not consistent at all, which is crazy. Okay, correct. Current ratio, we're looking about above 1. That's what we're normally looking for. What that means is the company currently has basically enough assets to basically cover their liabilities. Basically, they're expecting the earnings to grow double digits next 5 years. According to Morningstar first, is 28% discounted right now. So they expect the price to be about $300 per share. Simply Wall Street is more or less saying the same. So 350 something, 39% down, undervalued at the moment. Strong buy from TipRank, again 40% upside from where we are, a buy from Seeking Alpha. So a lot of these analysts are actually bullish on it. So these guys are using discounted cash flow models, and these guys are basically using a average out of what the analysts are expecting from the company, and they use more or less the same analysts. So that's why their targets are very similar, very close anyway. So yeah, it looks like basically people are bullish on the company, but when looking at the past, it does not tell us what's going to happen in the future, and the fact that it's expected to grow double digits, which is quite nice. And from Sharia compliance side of things, no issues. It looks like they're buying back their own shares. One of the other thing I want to check quickly is the earnings expectations moving forward. So as you can see, almost double digits every single year. So that's probably why these people are bullish on the company, like 5%, 9%, 10%. So they're expecting it to grow as well, which is quite good. Now, how did the company do for the last 3 years against the S&P 500? The company is actually negative 88%, okay, 19% for the S&P 500, and that's total return, but the company does not pay any dividends anyway. And the last 5 years, 18%, 85%, last 10 years, 304 and 173. So if you had it for the last 10 years, well done to you. You've actually got about over 300% total return, which is absolutely amazing. Now, what do I think about the company? I wouldn't personally buy it. I don't know much about the demand for their product and so on. So I would need to do a little bit more research on the company. And I don't know how much each one of those retains, whatever, are basically cost. So the Invisaligns, I don't know how much they cost and so on. So it's, for me, it's a pass. I would not actually invest in this company right now as we speak. Maybe if I learn more about them, I will potentially look into it. Anyway, if you have not liked the video, please do it. Okay, it really genuinely helps the channel, and if you can join us the Patreon account, that will be really helpful. Have a wonderful day. Assalamu alaikum.